number one, I think that's going to be the most important reason we see this migration, is that it allows everyday people to do what institutions have been doing for decades in the investing market. So
Alrighty, everybody, what is going on? Welcome back to another CYPRX video breakdown. In today's video, we're going to be going over some panel discussions, some fundamentals, and some documents from some of the largest organizations, showing you guys how massive of an opportunity there is for you all in the moment to start to learn DeFi, how to put your digital assets to work for you. For years, big money had all of the best opportunities. Now, however, tokenization, DeFi, things like fractional ownership are all breaking that wall down. You, the average lower and middle class investor, can now own things like multi-million-dollar real estate properties, infrastructure, or ESG projects with just a small amount of capital. That in which you're going to see in today's video breakdown. You can do things like earn passive income through DeFi opportunities, through staking, lending, yield generation, and liquidity pools, so on and so forth. And you can also access markets that were once reserved for the wealthy individuals with full transparency and fairness. The financial game is changing, and I don't think a lot of people truly understand how massive of an opportunity it is that sits and awaits the individuals that are proactive and take advantage of these opportunities in the moment. So don't take that from me. I'm going to start today's video clip off with this individual gentleman here. This is Shalong Tang of Monarch Asset Management. Hopefully I pronounced his name correctly. They are a quantitative asset management firm, and he put it here correctly in this particular video breakdown. The regulatory environment has lifted, the floodgates are about to open, and people are underestimating how much infrastructure has been built out for DeFi. Behind the charts and the noise, the rails for the future of finance are already being put in place. Everything that you need to be your own bank is live and scaling. This is the window to learn how DeFi works, how to earn yield, and how to control your own capital. The biggest opportunities are often the ones that most people dismiss until it is too late. Take a second here and listen to what this gentleman says.
I think, regulation is broadly getting lifted now, right? And whether you want to call this era of deregulation or regulatory clarity, it does open the floodgates to just increasing competition and mind share and access. And so I think, generally the blocker isn't now just purely regulation. It's actually infrastructure, right? It's I think people underestimate how much infrastructure has actually been built in DeFi, and then also for traditional institutions, how slowly they actually move as well. It does take just a tremendous amount of lift to integrate with all the different platforms.
So you all heard it directly from that gentleman that has credentials in this space, that people are underestimating the infrastructure that has been built out for DeFi. Again, why I'm reiterating this information over and over to you guys is because people in this day and age lack financial literacy. They lack the understanding of the opportunity that exists in the moment. And it is our job here at CYPRX Research to portray that opportunity to you guys so you can educate yourself further and learn how to be your own bank. That is exactly what's coming. We're going to take some snips from this podcast. Shout out to Milk Road for this one. Jay Hamilton here interviewing Sandy Quall, who is currently a head of innovation at Franklin Templeton, also has valid credentials at the CFTC, the World Economic Forum, and the DTCC. And listen to what she says here. Considering everything that we've been talking about in past video breakdowns at CYPRX, trying to show you guys that DeFi is going to be the new sexy. Earning yield on your cryptocurrency is inevitable. Posting your digital assets as collateral, being able to lend, borrow, provide liquidity, all these things to yield generate in the now is happening, and it's happening fast. And this is an opportunity you're not going to want to ignore. But again, don't take that from me. Take that directly from Sandy Quall, an individual who has massive valid credentials in the space. Listen here to what she has to say.
How do you see the future of portfolio management when you think about AI and blockchain and the role that they will play?
Yeah. So first off, I think, that there's a lot of investment products that I own today that I get a lot of great return from, but I don't get much utility from them, right? If I'm a big institutional player, right? I can get money for lending out my securities, and I can get other people to lend those securities on my behalf, and I get extra money and extra return in my portfolio for lending out those securities. If I'm a big institution, I can create liquidity and be willing to stand in between buyers and sellers and let the size of my holdings allow me to get extra fees, take a little fee on that spread between the buyers and the sellers. But if I'm an individual, I don't get those opportunities today. So I think one of the most important reasons that we are going to see investment portfolios move into tokenized form and into wallets is because it opens up all this new utility and all these new ways of making money through DeFi models. I can pledge my investments into a liquidity pool and get fees. I can stake my assets and get fees. I can lend my assets and get fees. I'm going to take my investment portfolio that today is earning me certain returns, and I'm going to be able to add to those returns with all sorts of additional kinds of income that can come in around that. So number one, I think that's going to be the most important reason we see this migration, is that it allows everyday people to do what institutions have been doing for decades in the investing market. So
what a huge statement directly from Sandy Call. She literally sounds like the beating drum that we have been touting for the past year and a half in the Wealth 28 Club. Exactly what she just discussed is everything that we discuss and talk about in the CYPRX Wealth 28 Club with our private members, and show them live examples in real time of how we're doing these things, earning and generating passive rewards on our digital assets in the now to expand and grow our wealth. I cannot stress enough that now is the time, considering everything that we've shown you guys on the CYPRX YouTube so far, to start learning DeFi. And again, don't take that from me, take that directly from Sandy Qual herself, who says that it's extremely important to learn how to do these things, considering the lack of financial literacy amongst the general public.
The financial knowledge of the majority of the world is pretty low. And in order to understand even basic things like staking or various yield generating products is a step that a lot of people don't take. And I don't expect you to speculate on what we need to do to educate the world on financial education. Like, that's an important thing that everybody needs to do. I just hope that they take advantage of that, because I just don't know that they will, especially when so many people have cash sitting in, their savings account, and they could click one button right now and put it into a treasury. And a lot of people don't even do that. And that's not even using blockchain or crypto, right?
But this is where I do think that AI is going to be super helpful, because just like what we were talking about with MetaMask allowing you to now use your Google or Apple wallet sign in and not have to remember your seed phrase, right? I am not going to have to make these personal decisions, right? Today, if I want to take advantage of all of these different yield-bearing opportunities around my investment portfolio, I have to actively manage the use of my tokens in that manner. In the future, when I buy an investment portfolio, my onboarding document may have a little clause in it that says, would you like us to optimize the use of your assets? And if I just click yes, this may all happen automatically without me having to take an action, right? That is the beauty of smart contracts and the ability to automatically execute based on pre-programmed contract terms. A lot of this may just happen automatically on my behalf. And the same is true for cash, right? We talked about cash and what's going to happen with my cash and my savings, right? Today, every institution in the world, every hedge fund in the world, every corporate treasurer in the world, every single day, they sweep all of their undeployed cash into yield-bearing money market funds. And that money sits in those money market funds until the next time they need that cash, at which point they can sweep it out of the money market fund, put it back into cash, and spend it. Right? This is too going to become an automated function that every person is going to have in their portfolio. Why would I sit with a stable coin in my account where I am not earning yield on that stable coin? I would sweep that stable coin into a tokenized money market fund. And if I need that cash back, I can sweep it out of that tokenized money market fund and have that cash available within seconds. We already offer this.
So she is absolutely cooking right now, right? She has literally just said word for word everything that we've been touting to you guys in the CYPRX Wealth 28 Club. Now, let's go back, considering that this panel discussion that was delivered by Milk Road is only from a couple of days ago. Well, if we come over here to a video breakdown that we shared on the CYPRX YouTube from 5 months ago with David Schwartz and gentlemen from the Stellar Development Foundation sitting on stage, discussing and talking about this same exact topic, that your idle capital should not just be sitting there doing absolutely nothing. We are entering into an era where putting your idle capital to work is going to be the new normal. And if you're not already doing this, you're lagging behind. You're collectively speaking, losing money. You're not operating on a level that the financial institutions are operating on, that in which you can do right now. You can operate on a level playing field through the utilization of DeFi by putting your idle capital to work, whether that's stablecoins or whether that's cryptocurrencies.
Yeah, I think, the more yield-bearing stablecoins we're going to see, the more competition there's going to be around, how much yield and how is it distributed to the users. And so I think this place where we're at right now, where there are a bunch of stablecoins and functionally they're doing the exact same thing, I don't think that's going to stay for long. And, people are realizing, I made this equivalent for like a checking account earlier. If you're just holding dollars and not getting yield on them, you're effectively losing money, right? So if you want to be a participant in the on-chain economy, you want to have a way to park your money in a way that generates yield. Yield-bearing stablecoins are the way to do that, and there's going to be a lot of competition with that space.
Now, that's going to take me over here because I don't think people really truly understand how big of an opportunity this is. Like the gentleman said from Monarch, that the DeFi infrastructure is being built out. Sandy Qual talking about the massive opportunity, the earning potential that being a liquidity provider or lending your digital assets out, borrowing against your digital assets, so on and so forth, and just participating in these yield generation mechanics really truly offer. Well, this is huge because this is, again, in a previous video breakdown prior to this one, we covered this in detail and kind of commingled it with some ongoing things and developments happening in the Metallicus ecosystem. But this goes hand in hand with something that Marshall Hayner also recently said in a panel discussion. And it is a document that was put out, or a post from the DTCC on September 11, 2025. And you can see here in the document, it might be small print for you guys, but it talks about how a key area of innovation is the tokenization of $300 trillion of global asset holdings. And then it talks about for collateral purposes in particular, right? This is the great collateral experiment. Well, for those individuals who don't really truly understand what collateral is or what posting digital assets as collateral allows you to do, in a nutshell, posting digital assets as collateral lets you unlock liquidity without having to sell your digital assets. You can access cash or stablecoins while keeping your long-term holdings intact and still benefiting from future price appreciation. That's a massive opportunity. It can help you do things like defer or avoid taxable events. It allows you to provide leverage for investments or yield generation strategies, and it gives you the flexibility to reinvest or cover expenses without exiting your core crypto positions. That is massively powerful in an aspect of utility that DeFi brings to these digital assets, particularly in some cases like XRP or XLM or other digital assets that have been otherwise shut out from the DeFi ecosystem. All that's changing now. DeFi also allows us to operate in looping strategies, borrowing against stablecoins, and compounding rewards. That is the biggest takeaway, all while your collateral continues to earn, staking, or yield supported rewards, turning your existing assets into productive tools rather than idle capital. And so if we come over here to a panel discussion, considering that I just showed you that the DTCC is motivated to bring $300 trillion on chain for collateral purposes, well, if we come over here to this panel discussion, this interview that took place just a few days ago, this is Marshall Hayner, and listen to what he says about how the future is going to be.
Now with digital payments, with blockchain, you could not only do this locally, but you could do it internationally. You could make a payment to the other side of the world in an instant. And so that's, a big part of the game changer that I see. But also, I think that, we have a debt-based system. You look at credit cards, and unfortunately, a lot of things are predatory, right? Young people get these cards, they get in over their heads on the debt. And if you think about in the future, what would happen in a credit-based system? What would happen in a system where, instead of borrowing against money that you don't have, you borrow against the crypto that you do have or something? And that's really kind of the advent of decentralized finance. I think, what was missing in this was the compliance components, the digital identity, the anti-money laundering built into the blockchain technology itself. That was the piece that was needed to integrate with traditional financial services.
So Marshall Hayner is talking about this debt-based system and how we're transforming into this more, again, wallet-based system where we're going to be able to take our digital assets that we own, post them as collateral to lend out instead of going to a bank to get credit, so on and so forth. This is huge because this goes hand in hand with what Sandy Quall from Franklin Templeton has been saying and screaming at the top of her lungs, that we are entering into an era of a wallet-based system.
Yeah, it's so important, and it's so foundational. It's almost like the difference between what did you have when you had a mobile phone and what did you have when you got a smartphone, right? So today, think about it. Most people have at least one checking account, sometimes a checking account at 2 or 3 different banks. They have maybe a savings account at those banks. They might have a brokerage account on a platform like a Robinhood or a Schwab where they're doing their own trading. They might have a wealth managed account either in their 401k or in a platform where they've signed up and have an advisor, be that a robo-advisor like for someone like Betterment or Wealthfront, or an actual person advisor at a firm like Merrill Lynch or Morgan Stanley, right? And on top of that, they're going to also have accounts for insurance policies that they might own. They might have accounts for healthcare accounts and flexible spending accounts, right? And who is responsible for aggregating and working across all those accounts? It's the individual, right? And so think about when you put together a net worth statement for your mortgage, or if you are trying to explain and understand what is your total wealth picture, you have to personally go and aggregate the information across all of those different accounts. Right now, if we shift that to the future where we believe you're going to have one wallet and all of your different assets will sit in that wallet in some kind of tokenized form, all of a sudden that entire need for aggregation goes away. All of my spendable cash will be sitting in my wallet, be that in the form of stable coins, be that in the form of tokenized money market funds, tokenized gold, tokenized deposits, central bank digital currency, cryptocurrencies. All of my investments will be sitting in my wallet, be that in the form of tokenized stocks, tokenized funds, cryptocurrency investments, physical investments in NFTs, right? All of that will be in my wallet, and all of the documents that manage my life, my driver's license, my passport, my insurance policies, the titles to my home, the titles to my car, all of that will be sitting in my wallet as well. Think how much easier life is going to be when everything is aggregated for me, right? I become the center of my financial life.
I want to pause right there. How important and how easy all this is going to be when Sandy Quall, in this case, becomes the center of her financial life. Do you understand how powerful what she's telling you is?
Think how much easier life is going to be when everything is aggregated for me, right? I become the center of my financial life.
Again, reiterating what I said at the beginning of this call, we now have the ability to become our own bank. When you understand that, you stop thinking DeFi is some scam, that it's going to go away, that you shouldn't get involved, that you shouldn't educate yourself on it. No, you should 110% because it's coming. And in the future, it is going to be mandatory. Again, don't take that from me. I'm not speculating on that. I'm taking that directly from the source, from an individual with valid credentials in the space, telling us that this is going to be a mandatory situation in the near future and that it is coming a lot sooner than most people think. Take a second. This is going to be the last video clip that I play, and then I want to show you guys one more document from a large organization that is actually doing this and providing these tokenized rails on blockchains, on public blockchains right now that are accessible to both retail and institutions via a recent announcement, just to show you guys that this is all picking up pace very rapidly, right? So last video clip here. If you guys have enjoyed this video breakdown so far, do me a favor, smash that thumbs up button and subscribe. Do appreciate the love and support. Always just trying to bring you guys the most level-headedness and realist information in the game, trying to just reiterate to you guys how important of an opportunity this is for you to educate yourselves. You, again, don't need to go out and risk your hard-earned digital assets in the crypto ecosystem to learn DeFi. You just need to get motivated to educate yourself. Take a second here and listen to Sandy say how this is going to be mandatory in the future.
When are we going to see the next catalyst? So you talked about the Genius Act being a big catalyst this year and recently. What's the next coming catalyst?
Yeah, well, that's filing by NASDAQ to get approval to trade tokenized equities on the NASDAQ exchange, right? You also had Coinbase go in recently. They announced to the SEC to ask for permission to trade tokenized stock, right? This is going to be a catalyst that makes the Genius Act and the ability to trade stablecoins look minimal by comparison, right? That is, to me, once there are rules in place that are going to allow us to begin moving our traditional financial products onto these new rails with confidence, I think that is when you're going to just start to feel this whole pace of acceleration, this whole pace of change accelerate. And when I say you're going to see more change in the next 5 years than in the past 50, this is why, right? That legislation, that permission to start to tokenize our real world assets and use blockchain to administer them, that's probably coming within the next few months, right? At most another 18 months, right? And once that happens, it's going to become mandatory that you have a wallet to be able to handle these assets. It's going to become mandatory that you have payment methods that work on chain to be able to settle assets immediately, right? It changes the playing field in such a profound way. And it's going to, I think, really open up lots of new potential for people.
It's going to open up the playing field in a new way, that level playing field. And she projected 18 months, y'all. Come on now. That is a wake-up call. That puts us literally at the end of 2026, rolling into 2027. And that time will be here a lot sooner than most people are just like, I don't know, anticipating. It's going over a lot of people's heads, y'all, but not here in the CYPRX Wealth 28 Club community. I cannot stress enough, this particular video breakdown today should have motivated you guys to come and educate yourselves. Again, head over to CYPRXtrading.com, tap into the Wealth 28 Club, learn about DeFi. You don't need to risk any of your digital assets to take this mentorship program. It's 28 bucks a month, and you can always cancel your membership. You're not going to want to, because the CYPRX Wealth 28 Club is so finely in tune with what's going on, the frequencies that are being put out, the pieces of the puzzle that are being laid down for people to pick up, to put into the grand scheme of things, so that way you can really grasp this wealth transformation. Last post that I have for you guys today. Okay, we're going to come over here. I actually had a couple of documents, but this video has gone on quite long enough. So the one that I do want to show you guys is this document from Wisdom Tree. Now, the reason why I'm showing you this is because from the DTCC's Great Collateral Experiment and to a previous document that we had shared as well, we are currently watching core of global finance quietly re-architect itself. And Wisdom Tree just launched a tokenized private credit and alternative income digital fund on Ethereum and Stellar. And it is open to both institutional investors and retail investors. So here is the document. You can see right here. This is just from the other day ago. And if we read thoroughly through this, you're going to pay attention to key vocabulary, just like I'm hoping we did here at CYPRX. So it says, Wisdom Tree, a global financial innovator, today announced the launch of Wisdom Tree's private credit alternative income digital fund, available to both retail and institutional investors via the Wisdom Tree Prime application. The fund seeks to track the price and yield performance before fees. The fund also has a T+0 settlement for subscriptions, T+2 settlement for redemptions, and a minimum of $25 investment. At launch, the fund will be on the Ethereum and Stellar blockchain. By combining daily liquidity and transparency with attractive income potential, the CRDT is a compelling addition to the platform's existing suite of tokenized fund. The fund unlocks potential for alternative sources of yield, including private credit, a rapidly expanding asset class valued for its attractive income potential and portfolio diversification benefits. We are giving crypto native investors the chance to diversify via exposures that were once reserved for financial institutions. So the reason why I'm reading this to you guys is so that way you can see that what Sandy Qual just said to you guys, that things and investments that were once available to the wealthiest individuals and the high-end 1%ers are now available to everyday average individuals. This is the level playing field. And when you wake up and you realize the access that you now have through nothing but a mobile device and internet connection, it should motivate you to get involved. So I hope that today's video breakdown did exactly that. Not only educating you guys to see what is ongoing and happening in the now, block out all the noise, block out all the outrageous high-end price predictions and all that bullcrap, and just put that aside and really understand what you are a part of right now. And it is becoming your own bank. For the first time in history, the everyday average retail can now operate on a level playing field with financial institutions. And at the same time, we are front running the institutions. This should be 110% motivation to get you guys in the loop with what's happening via a mobile wallet where you can take control of your finances. So with all of this in mind, hopefully today you guys enjoyed this video breakdown. If you did, do me a favor, smash that thumbs up button and subscribe before you head off. I encourage you guys to head over to CYPRXtrading.com, tap in with us in the CYPRX Wealth 28 Club, learn about DeFi, mature in your educational approach. And as always, be cognizant, be aware out there, and I'll see you all in the next video breakdown.